Guys, welcome back. So today we're gonna be going over the price action of April 17th. Like it's Friday, last day of the week. We are trading at all-time highs. We had an expansion of price after the last trading session that we had. So what can we see here? We can see a clean expansion to the all-time highs, like prices just printing higher and higher. And there are opportunities for you to trade that. Some traders might say all-time highs, continuation, tricky. Yes, it is tricky, it is difficult to find an entry point, but you just gotta understand that you gotta be able to trade every market condition if you want to be making money. And I'll be honest with you, there were opportunities, there were clean opportunities to make money. So on Friday, I took a trade. I took a trade and I took a win. So what I did was I was just looking at price right here. We are right on market open. We're trading here. What I notice is this fair value gap right here, which is quite significant. If you compare it to the last fair value gaps, all the prior fair value gaps, you know, they are not of they're weak. I would say they're weak. So what I did was I just wanted price to tap into this gap right here. So this was the gap. We'd go on a 5-minute time frame. And I just waited for price to mitigate the midpoint. Wait. Yeah, it was somewhere around here. And I just placed my stop, I think, right here. And today I went for my target. Like, I didn't target the previous high. I simply went for, I don't know, 1 to 3. Yeah, just like that. I just went for a 1 to 3 with a fixed risk to reward. Just to catch some of the price, some of the price movement. Because we were already, it's Friday, end of week. So I just thought it would be a nice opportunity. So what do you have? You have this fair value. Wait, let me show you. We have this 15-minute fair value gap. You can see that price is dropping down, and this strong inducement candle right here, as you can see, the bearish candle, it's mitigating, it's filling the fair value gap. We're closing above, and now you want to drop to the 5-minute time frame. And now what you see is this bullish inducement candle, like relative equal lows of the candle wicks right here. Strong expansion. And I think a lot of traders got stopped out on this move right here because some might be placed, like some trader might place the stops like right at the previous candle wick, at the previous candle low, or just below the fair value gap. And then you have this manipulating candle where a lot of traders are getting stopped out. I got to tell you, I was a bit lucky on that one. I just put my stop with a bit of breathing room to it. So I just managed to catch this trade and like without getting a stop out. So I was trading futures. I'm right now trading prop firms since September. I started trading prop firms, FTMO, so I'm trading on MetaTrader. So that's why I also use US 100. You know, I trade NQ and ES on top step, on top step picks, but MetaTrader doesn't, like, it doesn't connect with the NQ and ES, so you just have the opportunity to trade Dow, to trade US 100, but it's basically the same. Like US 100, you can take it as, you can just take it as NQ. So it would just be, I just want to go over that as well. What we had here, this was a trade I took on my MetaTrader account for the FTMO funded, and what happened here is basically the same. We had this 15-minute gap right here. Price is already here, so we're like in London session, and I'm just looking for longs, you know. Overall trend is bullish, and we just want to see where we can get in to catch a nice trade. Price is coming back in, retesting this 15-minute fair value gap. We are getting a nice fill right here. We get a closure. We get a candle closure right here at 9:30 a.m. And the next candle is quite different to the ES candle that we had, because as you can see right here, the first candle, like the 9:30 candle, it is filling the 15-minute gap. It's closing above, and now we are creating this low right here. So this low on ES, if you would be trading ES, you the the following candle would be trading below this low. And on US 100, like on NQ, we don't see that, right? So this would be even better if you would be entering. You would just wait for a closure of the first 15-minute candle after the market is opening. You would just enter on the close, and you just put your, I think this was the trade that I took, but I just noticed how close it was. I literally put it like on 7, what was it, 710. I targeted 710, and look how price is reversing from this point. Right now, guys, here I just targeted a 1 to 2. It was a 1 to 2 fixed risk to reward, because obviously I had no draws on liquidity. We are trading at all-time highs. I had nothing, like no point that I can target, no liquidity level, no high in mind that I could be targeting. We were simply trading all-time highs. So I just went for a 1 to 2 risk to reward, dropping down on the 5-minute chart. So yeah, and here the same as on ES, I would just put my stop loss below the 9:30 a.m. candle low. So we have, first of all, we have this low, the wick low, as a protection, and we have the fair value gap as a protection. So if price want to go lower, we would need to trade below the wick, and probably also to inverse the 15-minute gap, which would be a clearly bearish signal. So I think that would be the point where you would be looking for shorts. So yeah, that was it, guys. I managed to take winning trades on Friday. We were bullish again, and I'm gonna be back on Monday, recapping my trading, revising my setups. I hope I learn with every day, I learn with every session, and I'm just gonna try to give you some valuable input. Yeah, thank you for listening. See you in the next one.